Hello everyone, welcome to this video, and this is Gyandev. We'll be discussing about Nifty today. We'll be discussing about both long-term and the shorter-term view. If time permit, we'll be discussing about XPS 500, and if we have some time left, we'll be discussing about gold. So let's begin without wasting much time. So we'll talk about the waves here. This is a quarterly time frame of Nifty. It's a longer term time frame, and we can see it has been divided into five waves. Okay. Now these are cyclic waves. Okay, so it is divided into 1, 2, 3, 4, and 5. Okay, now you can see we are in the fifth wave right now. Now we'll go to the monthly time frame and we'll see how these waves are divided. Now as we go to the monthly time frame, we can see this first wave, which is here, is divided into 5 more waves. 1, 3, 4, and this is fifth wave. But this is a not cyclic but primary waves. Okay, so this is 1, 2, 3, 4, 5. And how is this the corrective wave is formed? The corrective wave is formed by A, B, and C. Okay, so this is A, B, and C. This is the primary waves. Okay, now you can see this particular B wave. This is a triangular formation. Okay, triangular formation. So A, B, C, D, E, and then there is the C wave. Okay. The C wave is 1, 2, 3, 4, and 5. Okay. So now, as we have defined this, the first wave very clearly, now we'll go and define the third wave from here. The third wave will define from here 1, 2. Okay, so this is 1, 2, 3, 4, and this is whole is fifth wave. Okay, now from the fourth to fifth wave is again we can divide into 5 waves. So that will be 1, 2, 3, 4, and this is 5 wave of the lower degree. So I can say intermediate degree. Now we can see the higher degree, the cyclic degree is fourth wave is coming and stopping at the previous lower degree of the fourth wave. Okay, so this is a cyclic fourth wave is stopping at the intermediate fourth wave of the cycle. Okay, now you can see this is an extended fifth wave. Extended fifth wave has one property: when it will fall, it will go directly to the second wave of the lower degree. Okay, so 1, 2, 3, 4, 5. So this is the second wave. Let us fall to the lower degree here. Okay, so now we have defined the third wave very clearly. Okay, now we will be defining the last fifth wave here. So it's very clear here. So this is 1, 2, 3, 4, and this is fifth wave of lower degree. So these are primary waves. Okay, this is 1, 2. So this 4, from here we started 1, 2, 3, 4, and 5. Okay, now how can we divide this one? We can divide very easily. This is 1, 2, 3, 4, and 5. Okay, so right here 1, 2, 3, 4, and 5. This is an intermediate waves. Okay, it is overlapping here. Okay, so this is the 5 wave of this first wave. Okay. And how we can define this third wave? Third wave can be easily defined here, like 1, 2, 3, 4, and fifth wave. Okay, so third wave is now completed. Now you can see here also the fifth wave is almost extended one, and when it falls, the fourth wave when it falls here, okay. So this is, you remember, this is a primary wave. The primary wave falls towards the fourth wave of intermediate. Okay, so this is a higher degree. Fourth wave is falling near to the previous, that is intermediate fourth wave. The same thing that happened here. Okay, you see this fourth wave cycle is falling towards the end of the fourth wave of the intermediate cycle. Okay, so this type of support zone is very important. Okay. So now we have defined 5 waves here. Third wave is completed here. Now we will go and check the 5 waves here. Now how the 5 waves are defined here? We'll take a pointer and we'll point it here right now, and we'll start counting from this times from this point while going to the lower degrees. Okay. Now remember, this is still a fifth wave, and this is fifth wave of the higher degree. This is a cyclic fifth wave. This is a primary fifth wave right now. Okay. Now we'll define. Now we'll be defining the 5 waves here. Okay. Now how to define that? It's very simple. We'll take 1, 2, 3, 4, and this is fifth wave. Now from here you can get it. We are in the higher cycle 5 wave, fifth wave. Then we are in the primary cycle fifth wave, and we are also in the intermediate cycle fifth wave. Okay, so 5, 5, 5. So 1, 2, 3, 4, 5. Now from this fourth wave, we'll take the pointer here and we'll start counting the 5 waves from this fourth wave. Is this 5 wave is completed or not? Where are we now in this fifth wave? Okay, so that for that we have to go to the daily chart. Okay, so right now we are here. We have our pointer is here. We'll count from here. So this is again 1, 2, 3, 4, and 5, and we'll go to the lower view, like minor. Okay. So again, understand, we are again showing that we are in the fifth wave right now of the primary intermediate fifth wave of the primary fifth wave of the cyclic fifth wave. Okay, so this says that we are in the last wave of this whole uptrend, and this could the first way saying that there can be a downtrend in the future. Okay. Now where are we from this last five waves? We'll take the pointer, this pointer here, and we'll put it here. And now we'll go to the lower chart, so the hourly chart, and we'll define where we're right now. Okay. So very simple. We are in the 1, 2, 3, 4, 5. So we can say we are in the 1, 2, 3, 4, and 5. Okay. And we go to the lower channel here to the minute one. Okay. 1, 2, 3, 4, 5. And what is this corrective phase? This corrective phase can be says that A, B, C. Okay. It can be the minute one. Okay. And the whole corrective phase we can say is A, B, and this can be a C wave. Okay. This is a higher degree corrective. Okay. So this is defined as A, B, C, whereas this A wave is divided into A, B, C. Okay. So this we can say irregular uh, corrective wave here. Okay. So whenever the origin point, when the correction moves from the origin point away from the origin point, it can be says that irregular flat wave. Okay. So A, B, and this can be say as C. Okay. So this C wave is always divided into five waves. Always it is divided into five waves. So how can we calculate here? We can divide by 1, 2, 3, 4, and this can be the fifth wave. Okay. This can be a minute waves. Okay, why I'm saying that it can go here, if we take a Fibonacci, this can be like 1, 2, 1, 2, and then 3, 4, and 5. It can be like this. If we take a Fibonacci from the zero wave to third wave and fourth wave, our 0.786 Fibonacci is coming near to this particular line. So that would be a potential reversal zone. Either this will be potential or something somewhere around this can be a potential reversal zone. Okay. Now the alternate count can be, this can be a fifth wave. This can be this can be 1, 2, 3, 4, and 5. Okay, and this can be a totally A wave, and then we may get a um, bigger. This can be totally A wave, and then we can get a B wave, and then we can get a C wave, and that would be higher one. This can happen. Very well happen. This A, B, C. This can happen. Or this can be 1, 2, and then we can move towards the third wave. Okay. So we'll see how the picture turns out. But if we remove all these things, so what is very important is this zone. This zone is very important. If this particular price cut through this support zone, then we can say there's a higher downtrend coming. Okay. Now we'll define everything towards the price action. Okay. So we'll draw a trend line to see if our arguments are supportive that we are coming to a downtrend. You can see this is a long-term resistance zone, and this is tried 1, 2, 3, 4, and 5th times. Okay, so if there will be a fall, what should be the criteria? The fall should not go below this line. Okay, if it goes below this one, then it's a higher downtrend will start. Okay, and if we are true that we are going to the fifth wave, then the price may come to this zone again. That is a potential reversal zone from here. But then the first thing we need to say, we'll go step by step, and the first thing you should break this one to come to this level right now. So this is all about Nifty. We'll go uh, and see the XPX 500, S&P 500. Here also we can very nicely 1, 2, 3, 4, and this can be a fifth wave, okay, of the higher cycle. Okay. So in this third wave, this is 1, 2, 3, 4, 5, and in this third wave, in this fifth wave is 1, 2, 3, 4, and we are rolling in the fifth wave. So it is 1, 2, 3, 4, and we are in the fifth wave, okay, in the lower cycle. Okay, now this is the point that we have to take a pointer here to see right now where we are. So we go to the lower chart, like weekly chart here, okay, and we put everything right here. So here also see we are in the fifth wave, and here we'll define 1, 2, 3, 4, and fifth wave of another lower time frame. So here also you see we are in the fifth wave. Okay. So anyways, this is also says that we are in the last stage of the uptrend. Okay, and this we can say this is an ending diagonal. We can say this is an ending diagonal right now, and this is already broken. This piece is already broken, and we can see a more downtrend in the future. Okay, we don't have much time here, but let's go and check gold very quickly. Gold is running in the parallel channel right now. If we need to buy gold, if you need to buy gold, then this parallel channel has to be broken upside. This weekly chart, a weekly candle should close above this particular parallel channel. And if you want to short it, this particular is a very supportive zone. This supportive zone, if it's broken, then it is a very big problem. Why? Because if you see the monthly time frame, this supportive zone has been supported thrice. 1, 2, 3, and here also 4 and 5 times. So this support zone is very critical. Okay, so buy above this parallel channel, sell below this. Okay then, it was nice discussing about this charts. If you have further doubts or questions or any comments, please let me know, and I'll be eagerly waiting for your answers and comments or any questions. So thank you very much and happy trading. Bye bye.